Welcome to another edition of Rethink Wealth. I'm your host, Kevin Thompson, investment specialist from White Rhino Financial. And today we're here joined again with James McGlynn of Next Quarter Century. James, CFA RICP. How are you today, kind sir?
Kevin, I'm doing great. How about you?
I am doing fantastic. Today what we're going to do is take a little step back, give our clients a little bit of insight on not on what's going on with the financial markets. As you can see, the markets continue to move higher. There's a lot of, I guess, gasoline on the fire right now, but we need to know exactly how big this fire actually is and is it sustainable. So, James, first question I have for you is talk to us a little bit about some of the economics you've been hearing for, say, from Rich Bernstein and people like that. Talk to us a little bit about some of the economics and the positive sentiment that you see in the markets right now.
Okay, Kevin, I would say, just reflecting back on last year, which I think maybe when we were speaking last, we were saying, yeah, the market was up every single month last year, first time in history. And apparently that was true. It never has been up every single month. So last year was a very good year. That's why people are touting how well things are. And you mentioned Rich Bernstein, and he's got some indicators to show that, yes, the market's been very good, but it's not expected to slow down because there's plenty of liquidity. The earnings are finally starting to come through, but with the corporate tax cut and earnings coming through, you're not going to have a recession, and the market's probably not going to have a correction. And then the overriding next fear is, what about the valuation or the sentiment? And his thinking is that people aren't gushing about how great things are, putting all their money in the markets yet, although this might be a year that they go overboard. So the sentiment hasn't been too crazy because we all still remember 2008 and the meltdown, and we're still a little nervous about the markets.
Yeah, you're absolutely right. One thing I'll talk to you about in regards to what you just mentioned is sentiment has been very good. For example, the jobs report in December, the report was a little bit weaker than expected. We added about 148,000 jobs, and compared to sentiment of about 191,000, the unemployment rate and participation rate remained about 4.1%, and wage growth increased very slightly, about 0.3% for the month. So all in all, jobs are being created in our economy. People are receiving jobs. But the main point of that is wages. If wages don't increase, you won't have much inflation in our economy. And that's what you're seeing right now, very little inflation. And as for growth, uh, we hit about 3.2 annualized in the third quarter of last year. That's the fastest growth since 2014. Consumer spending was revised down slightly to 2.2% from 2.3% in that quarter. So we're seeing a lot of things that are basically strengthening our economy. Businesses are putting more money back into their coffers, especially with the tax reform. I know we mentioned that we had a conversation about this earlier today. I know Verizon and AT&T, no, sorry, not Verizon and Apple. Sorry, not AT&T, but Verizon and Apple. Verizon, which is a company I follow, again, that's not a recommendation, but Verizon is now putting money up, giving employees restricted stock. So they have a 4 billion tax dollars coming back to them. So that's less dollars they have to pay out to the government, and they're putting those monies back into their employees' hands. Apple is giving their employees $2,500 of additional of revenues into their pockets, from a bonus perspective. So they have a lot of different things a lot of these companies are doing, whether they're buying back stock, whether they're reinvesting into their employees, or they're just doing special dividends, or just doing things like that for shareholders. So lots of things are coming down the pipe. We're going to hear a lot during these earnings calls the next couple of weeks, and I think the economy has a lot to continue this rally. What do you think
Well,
about that,
let me
James?
add some on the. You mentioned Apple with the $2,500 bonuses. There are a plethora of companies that are giving out $1,000 bonus checks to their employees. At Walmart, I think they're raising their minimum wage to $12 across the board. That's going to filter. Apple's employees are a little higher end than the Walmart's, but so either on the high or the low, there's lots of money being put in the pockets. Right there, income tax rates are being cut. And another mention on Apple, in addition to the bonus, that they're repatriating, I think, hundreds of billions of dollars from overseas and paying a $38 billion corporate tax to the Treasury. So lots of money coming back, and they're talking about building more factories or creating more jobs back home. So uh, the positives of the corporate tax cut and the individual tax cut, and maybe there was a behind the scenes deal with, okay, if we give you these corporate tax cuts, you start handing out bonuses, and they go, okay, we got it, we got the message, because it seems like they've all got the same script. What's makes the politicians who voted against the tax cut less less angry about, well, maybe everyone will benefit from this thing. So some positive political things might come from that as well.
Absolutely, and we also know that last year or this year we just nominated a new Fed chair. He just was actually officially put into the system. So we have a new Fed chair, Mr. Powell.
Yep.
Um, we had a couple of rate hikes. We had another 25 basis point rate hike in December. So a lot of different things coming down. I mean, I don't want to belabor those points over and over again, but people are thinking, hey, when is this party going to stop? Now, a lot of the signals that we're seeing, we're not necessarily seeing the party stopping anytime soon. That's not to say there's not going to be an increased volatility anytime in the market. Volatility is normal in the market. And last year, I think I mentioned this on a podcast before, we only saw a 3% downdraft in the S&P 500 with a 19% increase. That has only happened 4 times in the last 36 years. We've had only a 3% downdraft in the market. So volatility has been very suppressed in these markets. And when volatility creeps back in, I think the new reality will hit.
Well, and going back to the interest rate thing, it seems like we started off with all this happy news, the market doing great, earnings doing great, jobs doing great. Says, what could go wrong? Says, well, this little thing called interest rates, yeah, they slowly have raised the rates, and they're still very, very nominal rate increases, but at some point if inflation shows up, then they'll continue to raise rates, and at that point it will bite. But we haven't got there yet. But we're on the way for in addition to politically, the fiscal stimulus with full employment could lead to the overheating we're talking about.
Like James just mentioned, we have some definite risk out there. Danger of extensive fiscal stimulus in full economy could lead to overheating, elevated asset prices like we see right now, and valuations could continue to rise in a low interest rate environment, and weak demographics could negatively impact the labor force growth in the future. So we got a lot of different things out there that can definitely be seen as a negative in our current market. So James, you have anything else to add?
No, I said we'll be watching the interest rates. It's starting low, but if they pick up too fast because inflation is coming back, then that might be the biggest fear we have to look at.
Absolutely. And our themes, as always, we want to kind of give you guys an idea of what we're looking at. And as you can see, this year alone, the MSCI Emerging Markets Index has been up this year 6.43%. That is one of the markets that we have always or lately been I guess overweight. And again, this is not a recommendation. This is just telling you what we're doing here at our firm. We've been a little bit overweight in those markets in regards to a lot of our portfolios that we're investing in because we do feel that there is some returns to be had in those markets
When
versus
the valuation is
the
much lower.
valuation. There you
Yeah.
go. The valuations are much lower in those markets, so we have been a little bit overweight in those markets. But again, that is not a recommendation.
And for years and years, the domestic market has done extremely well, and the international was lagging. Now the international is picking up some, but this is the first time in I'm not sure how long we have global economic growth going on, and that can really benefit the emerging markets that you mentioned earlier.
Absolutely, the emerging markets and the developed markets. I read today that Europe is actually is in a positive state in regards to their economic growth. So that's a good thing. So hey, James, I appreciate the commentary and thank you for the call today. Thank you so much for the commentary today, James, and we appreciate your time. As always, the information presented is from White Rhino Financial, and any content within should not be deemed as advice. This message has not been approved by Guardian Life, Park Avenue Securities, and White Rhino Financial. If you have any questions, please contact your financial representative with White Rhino Financial. And always remember to rethink wealth.